We had a crash in 2025 that people quickly forgot about because the year was so good. I think there'll be another government shutdown in 2026. You heard it here. 2026, I believe, is going to be a good year, but I think it will be a volatile year just like 2025. It will be so important to have a plan, an ongoing, living, breathing, changing roadmap. Those ongoing themes, trade policy, government shutdown, budget issues, geopolitical things are all still on the horizon for 2026. Hello and welcome to the Wise Money Guys radio show. I'm your host, John Scambray, and I am a certified portfolio manager that specializes in helping people who are retired or about to retire manage their money. As always, if you have any questions or comments or want to get together for a no obligation consultation, give us a call at 916-967-3500. Normally I'm with my partner Giuseppe, but he is in the tropics in Hawaii, actually on a much needed vacation. So you just get to listen to my wonderful voice this whole show, but it is a packed show. We have lots to talk about, especially at the end of the year. So our main topics today are we're going to recap some of the big events and things that happened in 2025. And then, as we've been doing in the last couple of shows, we're going to talk about what to expect, or at least what we think you should expect in 2026. And more importantly, what sort of strategies and things you should be doing now to set yourself up for a great year. And just right off the bat, we do believe next year will be a good year, to give a little bit of our conversation away this morning. I mean, based on the data, not narrative, not politics, but actual financial facts of what our economy is doing, what the job market is doing, more importantly, what profits are being generated, and how the market and companies continue, especially in the S&P, and now even starting to show up in the Russell. Small caps are really starting to have and finish the year with an uptrend. But again, everything from an earnings perspective, we continue to surprise, meet, or exceed expectations. And I think that's going to continue into the year next year, just to give you a little bit of a snippet of what we're going to talk about. But first of all, a little bit of background, in case you're listening for the first time. Myself and my partner have been in this industry a very long time. Work for some of the largest firms in the nation, helping people with their financial goals and objectives. It's been almost, it's been over 30 years. And now, now that I think about it, since 1992 is when I first got my securities license to help people with their investments. And what a ride it has been. Since that time, after working for some of the largest organizations, as I said, in the country, about 10 years ago, I decided that there was a better mousetrap, and that mousetrap is independence. So I went independent in March of 2015, forming my own company, and it's been the best decision in my career, especially after 20 years of corporate leadership at the senior level, where, clients tend to be second. And I hate to say that, but that's the reality. The reality is when you're an advisor or a senior leader of or advisory programs, what becomes more important, because you have no choice from a compensation perspective, is shareholders and senior leadership, executive leadership, and achieving the goals that they set out for you. And that's one of the main reasons why I started this company and went independent, albeit using national companies as our backbone, such as Charles Schwab. But the real reason is because when you work for a large publicly traded financial services company, clients' best interest, now this is my opinion, people at those companies might say otherwise, but clients' best interest is second to executive leadership who is focused on their share price and their compensation, which comes from their shares. So that being said, I also like to say, myself especially, well, I'm battle tested. So when it comes to things that have happened, like what's happened over 2025 and like what's going to happen in 2026, I've seen it all. Whether it's been geopolitical things, ridiculous inflation levels, high interest rates, low interest rates, wars, which are, I'm sad to say, we're still seeing an unrest, which does infect the market. I do like to say infect. But it also creates opportunities, great economies, bad economies. There's always opportunity for you to make money. And the most important thing that I want to say as we continue to talk this morning is it is a statistical fact that people who work with professional advisors, especially highly experienced credentialed advisors like myself and my partner, do better, especially on average and over long periods of time, towards achieving their goals than the ones who don't work with professional advisors or professional advisory firms. So keep that in mind. Once again, if you have any questions or like the show and want to sit down for a no obligation consultation, there's many ways that you can find us and get a hold of us. First, and once again, our number is 916-967-3500, but you can also go to our website, which has many addresses to lead you there. Our favorite one is wisemoneyguys.com or onesourcewm.com. Both of those will get you to our website. At our website, you can always click on contact us to get us your name and email so that we can call you, and or I should say, so Kathy can call you and set up a absolutely no obligation consultation. But you'll also find lots of resources. You'll find links to our videos. You'll find the link to this show, in fact, that we turn into both a podcast and put on our YouTube channel, which you can just search the YouTube channel for Wise Money Guys, John Scambray and Giuseppe Visconti. Or again, you can find the links to our YouTube channel, our LinkedIn page, our Facebook page, our X account, as well as previous podcasts, previous videos, lots of articles and information that we put on there. And then, of course, always there's disclosures and links to our broker check to make sure you know how to make sure we're good guys and are the ones to more than likely be the ones that could do the best job at taking care of whatever your financial needs are. Now, our specialty is asset management. So we are experts in investments. In fact, one of the credentials that we have is certified portfolio manager, which is a very difficult portfolio construction design and credential that does not come easy. It's about 2 years worth of courses and then a very extensive 5-day final exam at Columbia University. Although I think I think the Academy of Certified Portfolio Managers now moved to NYU. But when Giuseppe and I did the credentialing, it was at Columbia. And glad it wasn't at Columbia during all the mess of the riots and protests and so on and so forth, which was just crazy. And nevertheless, our expertise really is in financial planning, helping people to know what they need, want, and wish, and then designing and implementing and actively managing the investments to help them accomplish, first and foremost, what their needs are in the least amount of risk possible, then how to potentially achieve their wants, and then also go for their wishes. Often wishes. In fact, when I met with a client that's been a client just since the beginning of this year, who's off to a great start, who just retired, has 7 figures, strong 7 figures, and is off to a great start, as I said, but they didn't have a financial plan. So one of the things that we do when we meet is, of course, we go over your portfolio and how it's doing, but more importantly, are you on track initially for whatever your goals and objectives are on the needs, want, and wishes side? And then we constantly meet to update the information in your plan. So when we do a plan, which is included in our advisory fee, by the way, we're going to constantly update it. We're going to constantly sit down, and we love meeting face to face. We will meet, over webinars and Zooms or Teams or Google Meets, whatever you prefer, if that's what you prefer. But our favorite really is being able to sit down with our clients here in the greater Sacramento area, of course, in the Bay Area, where we also have an East Bay location, and then in the Reno, Tahoe market, where we also have another office to conveniently meet with our clients who have fled California and now live in Nevada, which so many people do. And I don't blame them from a tax and politics perspective. That being said, we're going to dive into 2025, as I said, and then we'll end with some of the things that we see and recommend you do for 2026. When we come back, you're listening to John Scambray, the Wise Money Guy. Stay tuned. I'll be right back. Welcome back to the Wise Money Guys radio show. I'm your host, John Scambray, and we're going to dive into what happened 2025 isn't over yet, but how do you talk about 2025 without talking about the big, beautiful bill? And we're just starting to see the effects of that, by the way. I think that's one of the big things that are going to help make 2026 a good year, maybe even a great year like 25 was. 24 was a good year. 23 was a good year. 25 is shaping up to be a great year, especially in our stock portfolios, our main two that blew the pants off of the S&P 500, by the way. And for more information on that, give us a call at 916-967-3500. But the big, beautiful bill, one of the biggest things about that big, beautiful bill was the estate tax changes. So what people don't realize is, there's a lot of people in California and in the nation that have net worths that substantially put them into a situation where their family, their legacy, their charities, whatever the case may be, pays a death tax. And that's just frankly, double taxation and ridiculous. There shouldn't be tax, in my humble opinion, on your wealth that you created when you've paid tax on it, when you earned it all along. But I digress. The fact is that the death tax exemption went to $15 million per person in a relationship, in a couple, in a marriage. So now a family has a exemption, a combined exemption of $30 million. And let's face it, that pretty much covers just about everybody, except for the very fortunate, from paying an estate death tax. So that was one of the big things about the big, beautiful bill. But then on a smaller scale, the standard deduction increased for single filers from $15,750 to $23,625 thousand for heads of household, and then went to 31,500 from married couples filing jointly. So basically, that those numbers are exempt from paying federal tax. Then there was also a new senior benefit too, meaning Americans 65 and older get a $6,000 deduction. Now that one does have a time limit on it, goes away in 2028 with income-based phase-outs at 75,000. So you get an additional deduction if you're over the age of 65. It phases out after 150,000 for married couples and 75,000 for individuals. But again, it's another deduction. And what's important about these deductions from income tax, federal income tax, is what do we do with that money? We spend it. And when we spend it, what does that do to companies that have a good or service, their profitability or their earnings, or more importantly, their share price? If their profits and earnings increase, their share price increase, and it's good for the market. That's just some. There's business income deductions that have changed and increased, which will really help small business owners. And then there was also a different depreciation that is being changed on real estate, which will help out a lot of people on their tax deductions on the real estate side that have to do with depreciation and property taxes. So again, I'm not going to dive into the weeds of exactly what all the deductions were or are, but they're all going to be very helpful for growth of our economy in 2026. And then also, just looking back at 2025, I mean, trade policy. We can't talk about 2025 without talking about tariffs and all of the trade policy changes that our administration, that President Trump has made. Be against it, be against the president, like it, hate it. It's still pro-American. And that investment into American companies, into American manufacturing, into American goods or services is going to increase jobs, which will increase people's incomes, which will increase money in their pocket, which again will increase companies' profitabilities, will increase even revenues to the government coffers, so on and so forth, which will allow for further tax cuts. The more productivity, the more growth of our economy, the more money that flows into the coffers of the government to pay for, goods for services, and which then takes pressure off of, individuals as far as having to be taxed more and more to pay for those things. So again, whether it's the big, beautiful bill, whether it's trade policy, whether it's the estate and gift tax changes, there was also some changes to the gift tax. I talked about the death tax, but all of those things in 2025 are going to be huge for 2026. Speaking of 2026, and again, just giving a little bit of what you should do now, you should be rebalancing your portfolio. If you don't know what to rebalance into, or have it's a real struggle for you to sell losers and maybe rebalance, your portfolio from winners as well, you absolutely should. And things are going to be slightly different from an investment perspective in 2026. The high flyers of 2025 aren't necessarily, in fact, I don't think they're going to be the high flyers of 2026. I don't think you're going to see the same growth on Nvidia or some of the chip makers as you will on, and this is a snippet of 2026 where I think if you're on the growth side, positioning yourself for another great growth year from your investments. I think you're going to see it in automation, robotics, infrastructure, as well as energy and energy infrastructure. I also think there's going to be some opportunity, I mean, in biotech and pharmaceuticals, companies like Gilead or Ions on the biotech side, so on and so forth. I mean, there's so many incredible things in the biotech sector, whether it's for treating cancer, new methods for treating cancers, new immunotherapies that are in phase 3 trials now that could get FDA approval next year and make these biotech companies literally shoot through the roof, as well as pharmaceutical companies in the pipeline of drugs that they have to just treat, ongoing illness and conditions. I mean, like I said, Gilead looks to have a very strong year next year. And again, this is just a snippet of what to expect. But the big theme here is that where you saw double-digit returns in 2025, I think some of those things will still be good. Do I think NVIDIA still has, room to grow? Sure. Or Microsoft or any of the Mag 7, the Googles, the Amazons actually, I think has probably more upside than NVIDIA. I could easily see that going from a $220 or $30 stock that it is now to $300 or more next year. By the way, as things shape out next year, especially in the tech, biotech, pharmaceutical sectors, expect things to be volatile. One of the strategies that we'll talk about is dollar cost averaging and buying on the dips when we come back. You're listening to John Scambray, one of the wise money guys. Stay tuned. I'll be right back. Welcome back to the Wise Money Guys radio show. I'm your host, John Scambray, and I mentioned dollar cost averaging and rebalancing at the end of the year is very important. Don't be afraid to get rid of your losers and add to your winners and or trim your mega winners. I mean, so often people, come to us that didn't have a rebalancing strategy or a plan on what to do at the end of the year and then what to expect or do the next year. So the first thing you should absolutely have and update if you already have one, or get one if you don't have one, is a financial plan. And don't think of a financial plan as this, I do it one time and it's done, it's complete. Okay, I got that, I did that. No, it's something that needs to be your roadmap, something that you use to make sure you know how to measure success, to make sure you're on track, that makes sure you have plans for the unforeseen things that happen throughout our lives, especially in retirement. That might be a healthcare event. That might be a major purchase. Who knows? But the point is if you don't have a roadmap, if you haven't thought and put down to paper, again, how you're going to cover your needs, what your wants and wishes are, you may already have the money, all the money that you need, and then protecting it is something that will be prevalent in your plan versus growing it. Or it might be you have just enough money that is what your plan says. And so again, protection is important, but the income from your assets that you have created is really the main goal versus growth. And of course, always protecting what you have, even when you're growing it. And when it's enough that is multi-generational, preservation of capital for our clients is always the most important. And then how do you get income and growth, with preservation of capital being the most important thing, especially when you're not part of the earned income, the W-2 or the self-employment income that you used to have that you no longer have, that created wealth that you do have. So preservation, how do I get returns that outpace inflation without taking an unusual amount of risk? How do I get a 5, 6, 7, 8% return or more on my money without, taking an unusual amount of risk when I can't replace the investments or the savings that I have? And guess what? The good news is that there is fixed income investments that do have certain guarantees that pay 5, 6, 7, and 8%. There's alternative investments that are lower volatility than stocks or bonds that have distribution rates of 7 and 8%. The risk measurement is lower on various levels than stocks or bonds, and you can get higher interest rates off of those alternatives or dividends off of those alternatives than either. So don't think that, being conservative means not making any money or not making a meaningful return to accomplish your plans. But again, the most important thing for 2025 is doing a review, updating your existing plan if you have one, see where it needs to be tweaked. If there's any changes in your lives, getting those into your plan, and then making sure that your portfolio is reflective of the results of 2025 and any changes that are necessary. And once again, over and over, people, have this regret where they made a lot of money on a particular company. For example, NVIDIA went into the low 200s. I started saying, man, trim NVIDIA. I don't think it's going higher. Don't be afraid to lock in profits. And here it is down at in the low 170s to mid 170s. And so don't be afraid that you're going to miss out on future growth if you've already made 30, 50, 100% or more on a particular investment. I'm not saying get rid of all of it. I'm just saying don't be afraid to lock in some profit because there's something that you think there's nothing else that could give you double digits returns. There are. And I think the future, especially in this fourth industrial revolution that we're in, is going to be huge, more so in 2026 than it was in 2025, right? We were just testing the waters in 2025, right? A company could say, oh, we're investing, we're putting capital behind, artificial intelligence. What did that even mean? But yet no revenue for these companies like a Facebook or whatever. They're not generating revenue from artificial intelligence, yet their stock price went through the roof. Many companies just said, we're reshaping the way we do things, incorporating artificial intelligence, and the stock went through the roof. Well, guess what? Now in 2026, it'll be where the rubber meets the road. Is AI and anything that you've implemented, maybe it's, new computers, maybe it's, a new way to, process orders, or maybe it's automation or robotics that uses AI chips to create your output. Whatever the case may be, that will be the theme of 2026. And that's on the growth side, what you want to be invested in. Things that are actually using machine learning, artificial intelligence, that drives things that put out a good or a service and do it more profitably than without it. That's where you want your investment dollars in your mutual funds, your ETFs, or your individual stocks to benefit from this fourth industrial revolution that we're in. And if you don't have that, if you don't know where to find those opportunities, you absolutely should be coming in for a no obligation consultation. If you don't know how to rebalance or are afraid to rebalance your portfolio or feel that your current advisor isn't doing, a high touch and putting in the level of proactive management that we put in, give us a call at 916-967-3500. Again, that number's 916-967-3500. Okay. When we'll come back, we'll talk a little bit more about investment strategy, planning, rebalancing, some of the positions that I like that I've already been mentioning. So stay tuned. You're listening to John Scambray. I'll be right back. Welcome back to the Wise Money Guys radio show. I'm your host, John Scambray, and we definitely need to talk about one of the things that I missed, which was such a big deal in 2025 as far as news sensationalism. Do I think it was a big deal from an impact to our economy? No, it absolutely was not. It started maybe to have a little bit of effect, but I knew it was going to end before Thanksgiving, and it did. In fact, I even said it would end before Thanksgiving, and that's the government shutdown. So that was another big thing that happened in 2025. But here's why I mention it as we're talking about, what you should be doing to, be prepared and really take advantage of what I think is going to make a lot of money in 2026. And that is that I think there'll be another government shutdown in 2026. You heard it here. And that's because all they did was kick the can down the road. When they reopened the government, they did it with continuing resolution, which they've been doing for years. They haven't actually balanced a budget or passed a budget in years. They keep just funding certain parts of the government through continuing resolution or budgetary trickery versus actually balancing and passing a complete budget. And here we are again in 2026. That continuing resolution just basically gets us through the end of the year and into the beginning of next year. And then it's going to be the same battle. And mark my words, the news will make big issues of it. And the market will get a little bit concerned, but it'll wait to see if economically there's any sort of meaningful reduction in spending, consumer confidence, retail sales numbers, things that you would think that if hundreds of thousands or millions of people were out of a job would impact our economy because the consumption would go down. We didn't see any, as I said, major impact to consumption in the 2025 shutdown. In fact, GDP was revised up. Retail sales was good. I think retail sales around this holiday season is going to be fantastic, which will help be reported and kick off 2026. I think fourth quarter earnings, which will be reported obviously in 2026, starting in January, will also be another meet or exceed expectations. And I think guidance, for the most part, will be revised up by companies, which will really kick off the stock market into another good year. But heed this caution. The government shutdown, another big theme in 2026 is midterm elections. If the House and the Senate goes back to Democrats, look for a lot of these incredible things that have put in place that are pro-American business, pro-American prosperity, be kicked out, be impeached, literally, military people they want to impeach. Of course, the president they want to impeach. Members of Congress they want to impeach. Judges they want to impeach. It's ridiculous, all baseless and no grounds. And the reason why I talked about that, because this isn't a political show, it's an investment show, is because it will be the things in 2026 that could put a damper on 2026 economy and therefore 2026 prosperity and therefore your investment results in 2026. Barring that, so my prediction is the House goes to, I do think we have another government shutdown. I think that will mostly have no effect. Might be a little bit of volatility, when the shutdown is happening, where companies, institutions, people start taking some profits on their stocks. Maybe the shorts sellers goes up a little bit if that starts being the case. But however, I think the shutdown will have no effect because I also think it will be short-lived. The one thing that our politicians continue to demonstrate is they have no stomach and no actual backbone when it comes to their actual beliefs. Either parties will cave and then vote for just more debt and deficit, including the Republicans. And that's where I call myself a conservative versus a Republican, because Republicans have voted for every big spending bill, just like Democrats. And it's sad, but that's reality. The reality is, you can't focus on that. You've got to be prepared for it. And that is our specialty. Again, as active portfolio managers and investment experts, we know how these policies, whether it's monetary policy, because we just had Jerome Powell come out with a 25 basis point cut, the last meeting of the year, which again is a nothing burger. Everybody expected it. I expected it. I expected it to do nothing. It did nothing. That leads me to another big theme to look for in 2026. Who does Trump appoint for the new and open Fed chairman position? And is that person pro-growth? Pro-growth should be the mantra of the Federal Reserve Board and the FOMC, the Federal Open Market Committee, not, anti-inflation or full employment. If you focus on inflation and you focus on trying to stop inflation by trying to kill growth, you then kill jobs. It's just ridiculous. But yet that's the mantra. That mantra needs to change. So hopefully in 2026, the new Fed chairman for the open position in May of 2026 will be pro-growth. Productivity is what, and growth and the dollar value is what leads to no inflation or high inflation. By continuing to kill the value of the dollar through debt and deficit, that is why we had high inflation. It's the borrowing. It's the spending money that we don't have that makes dollars, not as reliable and not as valuable, which is why then you have increase in prices, because the real root cause of inflation is a lower dollar value, which takes more dollars to buy the same thing. So the way you get rid of inflation is making your dollars worth more. And if your dollars are worth more, it takes less dollars to buy the same thing, and prices therefore are less because it takes less dollars. So this thing that you got to be afraid of growth as a central banker is ridiculous. If we tackled our debt and deficits, if we balanced our budget, the dollar value would go highest levels against all the major currencies of the world, and our inflation would be non-existent. Employment would go through the roof because profitability for companies would go through the roof. So they would hire, they would add, they would buy, equipment, they would invest in real estate, so on and so forth. And so focusing on growth, focusing on debt and deficits will increase the value of the dollar, which will cut out inflation and make our economy prosperous. The reason why you saw gold go through the roof is because dollars, became less valuable. And so as a safety precaution, countries started stockpiling more gold. And from a simple supply and demand perspective, if demand for gold goes way up because demand for dollars is way down, inflation goes up and gold, goes through the roof. And that's what happened. That's what happened in 2025. That's what happened or could be fixed in 2026. So to recap, what you do now in 2025 is important to what type of year you'll have in 2026. If you don't have a plan, get one. If you have a plan, but just did it, checked it off, checked that box off, revise it. More importantly, call the wise money guys, John Scambray and Giuseppe Viscani, for a no obligation consultation. We'll do a financial plan for you with no obligation. We'll send you the questionnaire. We'll spend the time with you to show you, whether or not you're on track, where areas of opportunities are. Are you properly diversified? Have you fully planned for what risks life has to throw at you? Have you fully created a plan to accomplish your goals? Maybe it's to relocate. Maybe it's to retire if you haven't retired already. Maybe it's a major purchase. Maybe it's just to create the biggest legacy you can for your heirs. Whatever the case may be, success in 2026, it will be so important to have a plan, an ongoing, living, breathing, changing roadmap to make sure you're always on track for your goals and objectives. And we are offering that free of charge by calling 916-967-3500. 2026, I believe, is going to be a good year, but I think it will be a volatile year, just like 2025. Don't forget, in 2025, in April and May, we had a double-digit crash, not a correction. A correction is 10% or more in any of the major indices. A crash is 20% or more. And both the S&P and the NASDAQ were down, not down from its highs, down, not from its all-time highs, but down for the year more than 20%. So we had a crash in 2025 that people quickly forgot about because the year was so good. We also had a correction in November of 2025. So I expect more of the same, because I think some of those themes that cause those things, which were trade policy, which were the government shutdown, which were some of the geopolitical things, the war in Iran and I shouldn't say the war in Israel and Palestine, which involved Iran, the war in Eastern Europe with Russia and Ukraine, those ongoing themes, trade policy, government shutdown, budget issues, geopolitical things are all still on the horizon for 2026. But economically, the big, beautiful bill has set us up, and trade policy has set us up for a fantastic year in 2026. But it won't be easy. It won't be easy. And I highly recommend that if you want to make great money with the least amount of risk possible, you call the wise money guys at 916-967-3500. 3,500. Well, I hope you enjoyed the show. As always, have a wonderful Saturday, and we'll talk to you next week. Bye, all.